Hi everyone, welcome back to my channel, Mortgage Pro. Today we are breaking down how a HELOC works and diving into the details of interest rates. If you are curious about home equity lines of credit, you are in the right place. Let's get started. What is a HELOC? A HELOC or home equity line of credit is a flexible loan option that allows you to borrow against the equity in your home. Think of it as a credit card, but with your home as a collateral. How does it work? With a HELOC, you have a draw period, usually 5 to 10 years, where you can borrow as needed up to your credit limit. After the draw period, you enter the repayment phase, typically 10 to 20 years, where you pay back what you borrowed. Understanding interest rates. HELOCs often come with variable interest rates, meaning they can change over time based on market conditions. Your rate is usually tied to a benchmark like the prime rate plus a margin set by the lender. Fixed versus variable rates. Some lenders offer the option to lock in a fixed rate on a portion of your HELOC balance. This can provide stability in your payments, especially if you expect interest rates to rise. Tips for managing your HELOC. I want to provide tips for managing your HELOC. Number 1, keep an eye on interest rate changes. Number 2, borrow only what you need and have a repayment plan. Number 3, consider locking in a fixed rate if it suits your financial goals. Thanks for watching. If you found this video helpful, give it a thumbs up and subscribe for more financial insights. See you next time.